Hello everyone, welcome and thank you for joining me once again. In today's video, we'll be looking at question 3 of the DBE 2021 May-June paper, where we'll be looking at your financial indicators and the cash flow statement. And to begin with the question, it says the information relates to Digital Giants Ltd. The financial year ends on 31 March. And then we are required to calculate the following financial indicators for the financial year ended 31 March 2021. We're supposed to calculate the debt equity ratio, net asset value per share, dividend payout rate, return on average shareholders' equity, which is your share. And then the questions go on and on as we will look at all of that. And then your information, you're given information A, which is your extract from the statement of comprehensive income for the year ended 31 March 2021. You're given your depreciation, your net profit before tax, income tax, net profit after tax, and all of that. And then B, you are given your extract from the statement of financial position, your balance sheet, okay? And then you are given C, you are given information about your shares, how shares were sold during the year, what shares were repurchased. And then D, you're given information about dividends that were paid and also declared for the financial year. Number E, we're given information about fixed assets. And then F, we are given an extract of financial indicators, which is what we will be dealing with today. And then going to the first question, it says calculate your debt equity ratio. So memorizing your formulas is very important. So your debt equity ratio formula is non-current liabilities is to your shareholders' equity. Remember that. Okay, I just hope you got that formula. So going to your information that you are provided with, your non-current liabilities, which will be a loan, you're given a total amount at the end of 2,450. It's 2,450 is to your equity of 10,387,600. All right. And then when you calculate, this is always to 1. Let's see what we get there. Okay, it's 2,450. So, and what I'm getting here is 0.235, but you know your answer should always, if not always, it should be 2, 1 or 2 decimal places. But let's just say we will say here 0.24, 0.24. All right. And then moving on to the next question, what we have here is calculate your net asset value per share. Remember that your net asset value per share is your shareholders' equity over the number of shares in issue. All right, remember all these formulas. And the wording, they just give you the formula. It's net asset value per share. So if you would look at my previous video, I was explaining how your equity is defined to be your net asset value. So you can just watch the previous video and check that out. All right. So your net asset value, it's your shareholders' equity, which we have as 10,387,600 over the number of shares in issue. Now we have to check our information regarding shares. How many shares were in issue? So it says 700,000 shares were in issue on 1 March 2020, which is the start of the year. This is the same as 1 April 2020. All right, don't confuse the dates. Just be able to understand how the dates work. All right. And then 120,000 new shares were issued at 12.60 per share on 1 April. So we had 700,000 plus 120 that were issued. And then the last bullet says 20,000 shares were repurchased on 31 March 2021. I think that's all we need for now, minus 20,000. And then we have a total of issued shares as 800,000. All right. And then you divide by 800,000 there. So what do we get? Okay, if you want to take your answer to cents, you can just multiply it by 100 there, and then you get 1,298.5 cents. But if you do not want your answer to be in cents, you could just say it's 12 rand, 98. Okay, so your answer should be in 12.98 rands, or 1,298.5 cents. Okay, and then we move on to 3.1.3. It says calculate your dividend payout rate. Okay, so your dividend payout rate, what you are supposed to be looking at is how much have you paid your dividends over everything that you have earned. All right, so it's either you can use your earnings per share or what you have earned on your net profit after tax. But I think it is much easier when you use your earnings per share, because you can just simply check how much of the shares were paid. Okay, now we're going back to dividends paid or declared. Okay, let's use the information. So for interim dividends, they were paid on the 15th of August 2020, and we paid 45 cents per share. Okay, and then on the final dividends, we paid on the 31st of March. We haven't paid, we declared. We declared those on the 31st of March 2021 at 32 cents. So now the dividends per share that we are supposed to give to our shareholders is 0.45 plus 0.32. Now, how much did we earn per share? You go to your information, you are given what? Your earnings per share, which is 350 cents. Okay, we earned 350, but we paid a total of 0.45 plus 0.32. Oh, I made a mistake there. It is supposed to be 3.5 rand. All right, so multiplied by 100, because this is a rate, it's supposed to be in terms of percentage. And then what I'm getting here, it's 22%. Okay, it's 22%. And then 3.1.4 requires us to calculate the return on average shareholders' equity. So if you can't really memorize the formula, it says return. So return, it's profit, okay, after tax. On what? Your profit after tax is on to something, all right? It is on your average shareholders' equity. Once they say average, that means you should multiply that thing, that amount by a half. Okay, so that's another trick of how you can memorize the formulas, as much as you are given your formula sheet, but it is really important to remember all your formulas. And then once we move to our information, we have your net profit after tax, and information A that we're given as 2,870,000. It's 2,870,000 divided by the half of your shareholders' equity, your average, which simply means that you add these two amounts to get their average. What is your average shareholders' equity between the 2 years? Okay, which is 387,600 plus, okay, let's see what this amount was. 619. Okay, 6,910,000. All right, and then your return also, it should be in terms of percentages, and I'm getting 33.18%. We can simply just round this off to 33.2%. Okay, we're rounding off. Okay, then 3.2.1, for the cash flow statement, calculate the change in receivables. Okay, so in receivables we move to information B, your debtors control. How much are your debtors for this current year? It's 418. For last year we had a closing balance of 390,000. So we want to determine the change in debtors control or your receivables. All right, so this year's amount was 418. Last year's amount was 390,000. Okay, so our change is supposed to be 418 minus 390, and I'm getting 28,000. Now, coming to this answer, is it an inflow or an outflow? So it's going to be an outflow. Why? Because our debtors have increased. This simply means we have not received any money, but we have only just taken out stock to our debtors. We have not received any money. That is why it is supposed to be an outflow. We only took out stock and gave it to them, but we haven't received any money. That is why our debtors have gone up. So we have not received any cash. Remember, when we're talking about cash flows, we're talking about the flow of cash. All right. And then now we're moving to change in payables. So with change in payables, you also go to information and check what we are given. And given our creditors control there. So it's 520 and 359 200. Okay. It's 520 minus 359 200. Our answer there becomes 176 800. Okay, so now our change in payables, they increased. So if there is an increase, this simply means that we haven't paid our creditors, and if we haven't paid, it's going to be an inflow. All right, because there wasn't any money that went out of the business. We only just received the goods, but we haven't paid the money. That is why our change in payables has increased from 520 from 359 200 to 520,000. All right, and then we move to your taxation paid. All right, so your taxation paid, you should know 3 relevant amounts that you need to take note of. Your SARS income tax, you had an opening balance of 124,000, which was on your debit side. All right, and now you had a closing balance of 354 on the credit side. This is very important. And then you move to your income tax from information A. Your income tax for the year is at 1,085,000. Let's see how much we paid. Okay, so the first method to work this out, you can use your T account. All right, so let's use a T account. If you're comfortable with the T account, so this is for you. So this is a SARS tax. Remember that this is a liability, increases on the credit side and then decreases on the debit side. Now we had a balance. Remember, I had an opening balance on the debit side of 124. Okay, 124. 1, 2. And then income tax for the year is supposed to be 1,085,000. That's what we got from the information. Okay, so this is income tax was 1,085,000. Remember that this is a liability. As I said, it increases on the credit side. All right. And then what we know is that we closed with a balance of 354 on the credit side. All right. And when we close off our account, we know that these accounts should be balanced at the end. Now, what's happening here? We are having a balance brought down of 354, all right, on the credit side. But before this balance was brought down, it was a balance carried down on the other side of the T account as 354,000. Okay, but what we know is that these two accounts should be equal. And if you can check which side is bigger, so it's obviously this side, your credit side. Okay, it's 1085,123, but there is something missing. There's an amount that is missing. What's that amount? It's your taxation that you have paid for the year. All right, so we can just label this as tax or taxation paid. So that amount is the difference that you have paid. Okay, so you can just take 1,885,000 minus these two amounts, and then you can simply get your taxation paid as 607,000. All right, 607. Okay, and then now second method that I want to show you guys is also quite simple. I just hope you got that. Let's erase this. Okay, so that we can move on with the second method. All right, so the second method is just drawing your table. Okay, you know this is taxation paid. It's always an outflow. All right, we know it's always an outflow. Okay, so we had the opening balance. Please allow me to abbreviate. We have the opening balance of 124,000 on the debit side. If it's on the debit side, which means SARS was owing us, so we're not paying anything to SARS. That is why this amount does not have any brackets. We bracket anything that is an outflow. All right, and then now you have income tax for the year. So the income tax for the year, it was 1,085,000. Remember that it's supposed to be an outflow. It is always an outflow. If you're willing to work on this way, if you are taking this way as your preferred method, this amount, your income tax for the year, it will always be an outflow. So it will always have brackets. And then you have your closing balance. Okay, so your closing balance, it is 354, but on the credit side, if it's on the credit side, this means that we still owe SARS something we haven't paid. Now, to get your final amount, you just take this amount, you subtract what is in your brackets, you add what is not in your brackets, and then you get a negative amount of 607,000, which will be in brackets. Of course, it shows that it is what? An outflow. And then now we are moving to your dividends paid. So dividends paid, these are quite really easy to deal with. So your dividends paid are always going to be your interim plus what you owed. Okay, sorry, my English is running away. You owed the previous year, which is your dividend, your ordinary, what's it called? it's shareholders for dividends. Yes, it's shareholders for dividends. All right. Okay, sorry about that. Okay, so because what you have declared this year, you haven't really paid, you just only declared. So you are supposed to pay what you were owing last year and your current interim dividend. So what you were owing last year is 210,000 plus what you have paid your shareholders during the year, which is your interim, as no amount that is given. But you are only given that 45 cents was paid per share, which simply means that you add 210 plus how many shares were in issue? 820 multiplied by 45 cents was paid per share. So that will give you a total of Let's see, 210 plus 820 times 0.45, and then that gives me a total of 579,000 of dividends that were paid this year. Okay, and then we move to proceeds from sale of fixed assets. Okay, so in fixed assets, we are given that extensions to the buildings were completed at a cost of 1,360,000. And then equipment was sold at a carrying value of, we're not given the carrying value amount. And then was sold at a carrying value during the financial year. No other fixed assets were purchased or sold. Moving to our information, remember that we're given depreciation on fixed assets, which is vehicles and equipment. And land does not depreciate. Land does not depreciate, yes. And then we have fixed assets at carrying value. You have your fixed assets at the end of the year and here at the beginning of the year. Now, what we are supposed to do is find the carrying value of the fixed assets that were sold. How do we get that? So our opening balance was 8,878,000, if I'm correct. All right, yeah, let's just rectify that. Okay, yes, it is. And our closing balance is 8,865,000. So how did we get to the 8,865,000? What happened during the year? We have our closing balance. It is equal to our opening balance, which was 8,878, plus what we have added to our fixed assets. We added the buildings at a cost of 1,360,000. Okay, it's 1,360,000, and then we had depreciation of 785,000. 785,000. Remember that we're still working on how we got to get this amount. All right, and then it's 785,000 minus X, which was the carrying value of the sold vehicle. All right, so now we solve for X, and we supposed to get 588 1 2 3. Let me just ensure that is correct once again, and I'll redo my calculation. 8,878 minus 1,785. All right, yes, that's correct. It's 588. Okay, and then last question says calculate the funds used for the repurchase of shares. All right, so we are checking the repurchase of shares. It's bullet number 2 of information C. It's 120 new shares were issued at 12.60 per share on 1 April 2020. Oh, sorry, I'm supposed to look at bullet number 3. Sorry about that. It's 20,000 shares were repurchased on 31 March 2021 for 50% more, okay, than the average price of 910 per share. It's 910 cents per share. Okay, so it's 910 cents per share, which means this is your 100%. Okay, but they said 50% more. Okay, this is not divide. I'm just showing you guys that it's this is your 150, but they added 50% more. Okay, so to get your amount that they used to repurchase shares, you just simply say 910 multiplied by 150, and you should be getting let's see, 13.65. Okay, how many shares did they repurchase? They repurchased 20,000 shares. All right, and then that gives you your answer of 2 273,000. All right, and we have come to the end of today's lesson. I just hope this was very productive and it was helpful. Don't forget to subscribe, like, comment, and share with anyone who might need help with accounting. And that's all from me today. See you next time.